Hey, Wealth Lab 7 users, Glitch here. I'm taking a few minutes out of my trading schedule, day trading SQQQ today to go over some new changes I made to the previous strategy entry that we talked about in the last video, where I calculate the market state, bullish, bearish, bullish correction or bearish correction based on the classical definitions. So go check out that video if you need some context here. But the thing that I added to the strategy, and a link to the strategies available in the video description, is a table of average returns after specific periods of time for each of the four market states. And once again, I'm running this on the NASDAQ Composite. The beauty of this approach and the beauty of Wealth Lab in general is you can use it as a tool not only to run trading systems with buy and sell signals, but to do market analysis, to discover for yourself the numbers of the market. Don't rely exclusively on what you hear in the media. Use Wealth Lab to run these numbers yourself and get the true picture. So here is our result table for the NASDAQ Composite. On the left here, we have the four market states: bullish correction, bear market, and bearish correction. And on the right, there are some columns that represent the average percentage return after 1 day, after 1 week, 1 month, 3 months, 6 months, and 1 year. So a couple of interesting observations. If your outlook is short term, for example, weekly, monthly, maybe you're a swing trader, it's clearly not advantageous to attempt to do long position swing trading in a bear market with an average monthly return of only 0.19 compared to the 1.09 of the bull market. Thought it was interesting, though, that the average monthly return was still positive. It was only in the weekly scale that the average percentage return after 1 week was negative in a bear market. After 3 months, the discrepancy is still pretty pronounced. 3-month average return in the bull market for the NASDAQ Composite was 3%, whereas in a bear market, it was only 1%. 6 months, it was even a wider divergence, 6.2% for a bull market and only 2.4% for a bear market. I thought it was interesting that in the 1 year, average 1 year return, things pretty much coalesced into like around the 12.5% range, whether you were in a bull or a bear market. So the experts say not to panic, especially if you're a long-term investor. So this data seems to kind of hold that theory up a little bit, I think. The other interesting thing I found about these numbers is look at the bear correction numbers. The bear correction is when you're in a bear market, but prices have risen 10% from the bear market low, but still not 20%, which would get us into another classical bull market. While we're in a bear correction, we have actually the best daily, weekly, not quite monthly, but the 3-month and the 6-month and the 1 year average returns are superior to the bear and the bull market itself. So, and look at the 1 year average return of being in a bearish correction, 18% compared to the 12.5 of all the other market states. So look out for coming out of a bear market when you're in that bearish correction phase, at least in the NASDAQ composite, that looks to be a premium time to jump in and get a jump on the next bull market. So here you go, a way to run your own numbers in Wealth Lab 7, do your own market analysis. Don't rely only on what you hear on CNBC or these other channels. The link to the strategy is down here below. See you all on the Wealth Lab forum. This market state strategy is going to be incorporated into a new indicator that we'll release in Build 46 probably tomorrow. So we'll have a Build 46 update for that. And until then, see you all on the forum.